Looking at the left side, let me show you again because that other video didn't work. Instead of just using any array, you want to use arrays that have been used as support. So if we're looking at it as just split it down the middle, so we have the left side and the right side. If you're trading this side, when price utilizes like this order block as support and then runs higher, you want to use that when it gets to the other side as resistance. So those are the only ones I'm looking for to use. I'm not going to use like this one here. I wouldn't use this fair value gap there. I wouldn't use because it wasn't used as support on the left side of the curve. So if it's just like a plain fair value gap that wasn't tested, or basically like an order block that wasn't tested, like if you're going to classify that as an order block, there was no test on the high for support. So for this example, you have like your your CSD here, okay? We have a breaker breaking down through it, and then we want to use that as resistance. Like that's the SMR portion. We're not going to go over that. What I'm going to go over is like how to use this side of the curve when you're managing the trade, basically. So this would be a good gap because you have the fair value gap, you run higher, you come back down and test it, and then you run higher again. That's a good gap to use when you stretch it across the other side. This one as well is good to use. We ran higher, came back down, tested it, ran higher. Let me try and find an example of one that's not a good fair value gap. Obviously, like this one is not good because there's no retest, but specifically I want to show you one that's been like overtraded. I don't see an example in this price action here. I'll show you on another market maker model, but anyway, these are like the fair value gaps I would want to use, ones that have been tested. You get down below it, you use it as resistance. Same here, you get down below it, you use it as resistance. Same thing goes for the order blocks that you want to use. You want to use something that's been tested. So here we have these order blocks, okay? Down close, run higher. You really don't want to use the wicks if they're that large. So these body closures here, okay? Run higher, test it, and then run higher again. If we drag it over, we go down below it, use it as resistance, drop lower. Left side of the curve, right side of the curve. So if you're going to use stuff here, there's really nothing to use. So in this scenario, I would drop down to a lower time frame. So I can see the expansions and retracements, expansions, retracements, expansion, retracement, expansion, retracement. And then that's what you use to mark. So you could start off here, run up, use that fair value gap as resistance, drop lower. We have our reversal here, SMR lows there. And then there's nothing through here. So you would expect price to do the same thing on the right side. And it does. So this would be like the first series of order blocks that I would use because we drop lower and we come back to test it. Drop lower, test it, drop lower. We don't test this fair value gap, so I wouldn't use that. We drop lower. We don't really test these order blocks. I really wouldn't use that. And you can see it kind of holds it down there, and then once we get above it, it takes off again. Let's see if we can go to the 5-second and get more data. Not really. Not really. You might be able to use this little fair value gap there. We get above it, come back and test it, and then continue. But you don't want to be making these PD arrays on the 5-second chart. You want to use the 15-second. Like once Price performs the SMR and puts in the SMR, you just go to basically the 1 minute and use what you can there, so you're not zooming in too much. Maybe that's not the best example. It's kind of just a quick run. Let's see if we can find another example. Let's see. So Fridays, price action. Let's use this little fractal model here. So the SMR is there, you have the left side and the right side. This would be a good fair value gap to use because it's formed. We came and tested it as resistance, dropped lower. And then you get above it on the right side, test it, and it goes higher. You could use this. Let's see. Let's drop lower. If you go to the 15-second, things are a little more clear. So you could use this fair value gap. It's formed the gap. You run higher for it forms resistance, acts as resistance. Then we drop lower. Once we get above it, it needs to act as support. So once that candle closes there, the next candle tests it and runs higher. You have these order blocks here. Drop below, tested it as resistance, drop lower. Once we get above with this candle, once you close above, it needs to use it as resistance. This would not be a good PD array to use, these order blocks here, because we created the order block, dropped lower, but we didn't test it. So I wouldn't want to use those. I could use this, because we formed the order block, dropped lower, ran higher, dropped lower. So I would use that one. This fair value gap you would not want to use. So when you have a fair value gap that gets closed above, you wouldn't want to use it. You only want to use fair value gaps that only have bodies and wicks through here. And then if there's a body closure above the fair value gap, you wouldn't want to use that because it's invalid. You would not want to use this one. Okay, there's no test. You don't test it as resistance. So therefore, we shouldn't use it to test as support. This would be okay. Run lower, test, run lower. Once we get above it, anything comes down into it, you could use it as support. Do one more example and then that'll be it. Let's use this example. Okay. So we have original consolidation, SMR down here, and then a lot of high resistance liquidity here. So this left side of the curve was a high resistance liquidity run, right side of the curve low resistance. So in this scenario, we could use something like this. So you have that order block, bullish bearish order block gets tested, traded through here. Once we close above, comes back down, tests it as support, and runs higher. You wouldn't want to use this. This would just be your CSD here. Once we get above that, you have CSD. So you really wouldn't want to use it. I mean, you want that to support price, but that's not like a PD array you're going to drag across and use on the left side to the right side. If you zoom in, might be able to find more places here, especially around the SMR here. So that's not good. There's no test there. This would be a good gap to use because we've created the gap, tested it as resistance, dropped lower. Once we get above it, use it as support. So, that could be your entry. And look to go long to the original consolidation. Okay, right here. Let's find another one. This would be a good one to use. So on the 15-second, these order blocks, run lower, test them, run lower. Once we get above, function is support. Same thing here. Order block, ran lower, tested as resistance, dropped lower. Once we close above it, see how that didn't close above it and it runs lower? Once we close above like this, you would want to see a function as support. Okay. See how it functions as support? We close above, now it needs to act as support. We come down, support. It runs off again. And then within here, you have another market maker model itself. Okay. That could be your POI. And if you're gonna like scalp, this could be another model here. Original consolidation, SMR. But in this small of a range, you're gonna want to drop to the 15-second. SMR there. So this would be a good gap to use here. See how it came up, respected it, dropped lower, it ran higher. That would be a good fair value gap to use. Just as this one here, you want to include the volume imbalance. So price goes lower, runs higher, does not close within that fair value gap, and then drops lower. So once we get above it, once we close above it, you want to see it act as support. And this isn't a clean run. As you can see, it's high resistance. It's just chopping back and forth. Let's see. That's about all for this little price run. Let's look at this one. So if you're playing that as your SMR, so if you're trying to short this, left side of the curve, right side of the curve, you want that to go lower. You have the SMR here. Okay, we drop down below, test it as resistance, and drop lower. This is a good fair value gap to use. we came above it, tested it as support twice, ran higher. If we get down below it, we want to see it function as resistance. This is a good fair value gap to use here. We've ran above it, came back and tested it as support. If we get back to it, we want to see it function as resistance. And this is what you can use to get yourself out of the trade too. Because if these fail, then you know you're not in the market maker model anymore. You know you're not on the right side. That gap, this gap is no good. There's no test of it. This one's okay. We run higher, test it, then we come back and we can't break through it, and then we start to revert back the other way. Okay, we'll do one more example here. So these would be okay, these fair value gaps here. Because we run higher, we test them. We run higher again, and then we close down below. So that becomes your SMR. Left side, right side, SMR. And there might be SMT here. Let's see if there is. Okay, so SMT on this side and on this high and that high. So okay, so you get above it, test it, run higher, drop lower. Once we close below here, 1018, the next candle tests it, drops lower. You could use this here, fair value gap, test it, run higher. Once it closes below, use it as resistance. This is a bad gap to use, okay? This is a bad order block to use. You would want to use this one because we ran higher, came back and tested it. So you would want to use that one. You could use this order block. Ran above it, tested it. You could use this order block. Okay. Ran above it, tested it. These are bad fair value gaps to use. There's no support. And then when you see stuff like this, you expect the other side to deliver the exact same way. That's why there's really nothing to use, because price should just go right through all that. You come down here, we have some support levels here, ran higher support, ran lower, resistance, drop lower. Okay, and then another SMR occurs, and then we start the market maker model all over again. Okay, SMR. Okay, this is a good example. You don't want to use this fair value gap. Price ran up into it, closed above it, ran back lower, ran higher. It's invalid. You don't want to use that. It's not going to use that as support on the right side of the curve. You could use this order block because we dropped lower, came back and tested it. So once we get above it, tested as support. But that's a bad fair value gap to use. This is a bad fair value gap to use. Price runs up in it, closes above it, closes back down below, closes above it. It's not being respected, so you don't want to use it.